Hey guys, Matt here. In this video, I'm gonna go over 5 things I wish I knew before I started stock investing. Thing number 1, you have to actually research companies before buying their stocks. I started investing just over a year ago with Robinhood. And let me tell you, less than 3 minutes after I opened and activated my Robinhood account, I had already bought 3 stocks. It was Bank of America, Fitbit, and Cisco. I bought Bank of America and Fitbit just because I saw them on their watch list. Did no research whatsoever. I knew who they were, and bam, I bought them. I spent like $100 on both of them. The only stock I actually searched for was Cisco, and that's because I am a network engineer that worked for Cisco products. I bought Cisco because I love them. I got really lucky with how Bank of America turned out. I still own them today. Fitbit was kind of a disaster. Didn't really go much higher, didn't really go much lower. It just sort of sat there doing nothing and being a terrible stock to own. Cisco is currently in my favorite position. I absolutely love them. But when I bought Cisco, they were at their all-time highs, which is one of the worst times to buy a stock. But that's exactly what I did. Fuck my life. I'll tell you more about Cisco in step 2. But you'll hear people tell you that stock investing is like gambling. And if you do the things that I did, it most certainly is. Guys, you gotta look through these companies before you buy them. You gotta go to their website, check them out, check out their business model. You need to read their 10K, you need to read their 10Q, read up on any news events, check out their CEO, listen to their earnings call, come up with some sort of a bullish thesis, why you want to buy the stock. They need to determine a buy point, and then so on. Don't just randomly pick stocks just because you see them on a watch list. Number 2 is you gotta be able to handle loss. So you hear it in movies all the time and on YouTube, whatever. Buy low and sell high. Don't be afraid to watch your stock price drop. It's something that you tell yourself that you can handle. You say, oh yeah, I can handle that. And you believe that all the way up until it happens. So when I bought that Cisco stock, I was very happy at first. It went up and up and up. I think it went as far as $56. And then bam, the trade war with China, it kicked into full gear, and then the price started tumbling. And it kept dropping and dropping and dropping and dropping. Now the first time you see that shit unprepared as a new investor, you get scared and you want to panic sell. And I did panic sell a bit. I mean, I'm not going to pretend like I'm a guy with a heart of steel. Like, it took time watching my stocks drop before I had the discipline to be able to watch it happen without getting scared. The crash that happened in March earlier this year, yeah, that did the trick for me real quick. I mean, I straightened out real quick after seeing that shit. $2,000 gone. After that, after seeing shit like that, you learn to be able to handle shit. So if you're into long-term investing like I am, don't be afraid to watch your stocks drop short-term. It's going to happen. You just have to learn to live with it. Number 3, don't buy high and sell low. Yeah, I kind of did this at first. FOMO, fear of missing out, that's a real bitch. So buy low and sell high is what you need to be doing in the stock market. But human psychology tells you to do exactly the opposite. When you see a stock you like and you see it shooting up and it's totally green and it's hitting all-time highs, you want to get in on that action because you see it's growing and you think the momentum is just going to keep going. So you buy in at all-time highs. And sometimes that does work. With certain stocks, that does work. The stock does keep going up and you start making money. But oftentimes what happens is that once the stock price starts dropping, that loss aversion starts setting in. You start getting scared because now you're losing money. And psychology kicks in, you don't want to lose more money, and then guess what you do? You panic sell when the price is low. Buy high, sell low. You don't want to do that. You're going to need to have the discipline to buy a stock when it's low, when it's beaten down, and then sell at a later point when the stock is higher. Now there are different ways to get an estimate for when to buy a stock. There are different methods like using PE ratios and discounted cash flow, but keep in mind, all those methods do just that. They estimate, they give you an idea of when to buy a stock. Over time, you'll get a feel for when you're going to want to buy a stock. But basically, it's when it's lower, when it's beaten down, and not at all-time highs. I can't stress that enough. At least not when starting out. There are some growth stocks that you'll find later on that you'll want to buy at all-time highs, but those are very few and far between. Thing number 4, don't buy or sell stocks just because someone tells you to. So YouTube is full of financial gurus and retail investors like me that will make videos on what stocks to buy or stocks that you need to buy right now. My advice is you can't listen to them. And you can't just go on Yahoo Finance and look at the stock quote, see if the fair value meter says undervalued, scroll down to the bottom if the analyst recommendation is to buy. You can't just look at that. These analysts and these gurus, they may have different financial goals than you. They may have bigger risk tolerance. They may be thinking further out. They may be thinking short term. They may be better quick to react if a stock price drops suddenly or if a stock price rises. And most importantly, none of these analysts or gurus are psychics. Some of them might be wrong. Jeremy from Financial Education, he's wrong sometimes. He is wrong, and he'll be the first to tell you not to copy him when he buys or sells a stock. Think about it. What if you copy one of their stock decisions and something goes wrong with the stock, it drops a lot, and then they don't make another video about it? What do? You can't follow them because they're not making another video about it. What are you going to do then? Now you have to rely on your own education. And if all you're doing is just blindly copying someone, you don't have the education to do anything with it. So you're probably going to panic sell. You need to do your own research based on your financial education, your needs, your risk tolerance, and your timeline. The point is that you need to do you based on your own financial needs. Fifth and final thing that I wish I knew before I started investing, I should have started way earlier than I did. This is probably the biggest one. I'm 38 years old, and I didn't start investing with my taxable money until I was 37, just over a year ago. Now, I have been investing in my retirement accounts for some time, and even then, I started way too late. Now, I could tell myself that I just didn't have the money to start, but that's all a damn lie. Even back when I was making $40,000 a year, I could have found money to invest. I know I could. Looking back, I could have found money, but instead I blew it all on dumb shit. Knowing what I know now, I could have invested back in 2014, and I'd be fucking rich today. I'd have a much bigger net worth than I do now. Heck, there was a time when I got a bunch of money from life insurance when one of my family members passed, and I could invest in that, and I'd be even richer today. And that was right after the Great Recession, like when stock prices were cheap. I'd be fucking set today if I invested then. But I didn't, because I'm a dumbass. So if you're watching this and you want to know when to start investing, like, start right now. Start right fucking now. Don't wait until you're 37. Or if you're already 37, well, then start. Start investing in an emergency fund. Get your debt straight or eliminated. Start investing in your retirement accounts. And then start investing in actively picked stocks with your taxable income. Heck, you don't even have to like stocks or even like evaluating companies or like any of that. You can invest completely passively with companies like M1 Finance or Vanguard ETFs. Heck, you could even get in a mutual fund and have someone invest for you. No research required, just start today. Your net worth will thank you in a couple of years. Anyways, that's all I have for you guys. Have a great day and eat your vegetables.